Welcome back, everyone. In this video, I will share my thoughts on Euro USD, why I want to sell from this point, the higher time frame buyers supporting this trade, and everything technical analysis. I trade smart money concept, obviously, but before we get to anything technical analysis, I want to talk to someone in this video. I know you might be going through some personal issues, life issues, but I just want you to know that trading is very possible. You just have to clear out all the noise, focus on yourself, focus on running up the bag, on mastering this craft because I promise you, you can make a shit ton of money trading. I promise you. You just have to put in the hard work, stay disciplined, be patient with yourself, give yourself time to learn and to get better at this. Have a tunnel vision of yourself and the person you want to become and keep that person in your mind always. Don't let the outside noise phase you. Just keep grinding because at the end of the day, it's perseverance, hard work, and determination, especially perseverance because this thing can get very hard on people and they quit. But if you stay trading like without quitting, I promise you, you're going to reap the rewards. So, like, stay active, grind, and I promise you, you're going to see the results. Okay, let's go back straight to the chart. Why do I want to sell from here? And if you are trading smart money concepts, you might have an idea of why I want to take sales from here. But if you're new to smart money concepts entirely, you can see structure is very bearish on a 1 hour time frame from here. I think I wanted to take buys from here. I took one buy. Sorry, I took two buys from here, which all was losses. I lost 0.5% and 0.5% of my account. Yeah. Why did I take buys from here? Because this point was at a daily time frame demand. You see the lower high, lower low, lower high, and at this point it broke and invalidated that demand zone. Lower high, lower low, and a retracement back to those lower highs, and I'll take sells downwards. So why did I pick out this small zone? Why didn't I take this entire buy before sells? And I like to reduce like the amount of trades I take in a specific setup. That's why I go for more refined points rather. Hold on, let me delete this. I look for more refined points, and this point was a point that wasn't mitigated. As you can see, there are wicks over here, meaning that price has mitigated those points and left out these points. And I'll zoom in for you to see clearly. We see price make this low, comes back, takes out the liquidity above these highs, and you see the violent sells, leaving out this imbalance and also this imbalance here, if you can see clearly, and broke this structure. I call this a minor structure, and I also call it intermediary structure. So anytime you hear me say intermediary structure or minor structure, is lower time frame structures that are not really relevant in terms of, I don't know, lower time frame structures are not really that reliable like the higher time frame structures. Can easily fail. That's the point. And I was waiting for price to come back into the zones and tap me in, but it never tapped me in yet. This is Friday, 17th of May, and I'm not going to place any trades yet on my MT5 or yeah, I'm not going to place any trades yet because it's Friday and you know anything can happen on Saturdays and Sundays. The news can come out and you see price gap over 50 pips above here and you'll be on a loss, a very big loss. So I'm aware of that. So I won't take any trades yet. At, at the open of London on Monday, if this zone should hold, if this supply zone should hold and still be at these zones, then I'll wait for price to tap me in. But if it doesn't tap me in, I'll wait for a double break to the upside. Now, what do I mean by, sorry, double break to the downside? What do I mean by a double break entry? It's basically like a double confirmation for me that price is actually going to sell without coming up here. So double break entry is going to look something like this. Let's go to the 15-minute time frame to see what I'm saying clearly. All right, so this was the intermediary structure point that was broken, minor structure. And if I see price retrace back to this other block and break it again, yes, I will now have confirmation that, oh, this price might not actually want to tap this place, might go down, and I will take sales from this point. I hope that's clear. If you don't have, like, if you don't find it clear enough, you can comment and ask questions, and I'll reply to them. Double break to the downside, and I'll take sales from here. So that's the plan for next week. Let's delete this also with this. Yeah. But firstly, let's go to the daily time frame to see what's going on a bigger picture. You know, if you've ever watched like this news, FMC news, or any news of any sort, you see that these bank people, smart money, you can call them institutions, whatever you call them, people that move price, they pretty much set a standard of where they are going to take, for example, USD to what interest rates they are going to go with, and whether to hike it or reduce it or not, that will affect the movement of this market. And they do this like they plan this 6 months ahead. They give it 6 months time to actually execute what they want to do, and they pump in that money systematically, like in an interval, and they mostly focus on the higher time frames. On a higher time frame, what do we see? And this was the demand zone I marked out. Very clean demand zone, but that's what trading is. Sometimes your clean, dope, precise demand zone might not hold, and you have to live with that. So this was the other block I traded from, and I took two buys, which you saw with two losses. And eventually, this other block failed, and my buyers changed from buys to sells. And I'm going to sell this market for some time back down to this demand. Why am I doing that? Okay, I'll explain it. On a daily time frame, we see a different narrative of price. That's why you have to always consider it. You have to move with the higher time frames in tandem with the lower time frame, in relation with the lower time frame, not the other way, not lower time frame to higher time frame, but higher time frames to lower time frames. I think that's where most traders get it all wrong. Like they focus on 1 minute without looking at the overall movement of price, at the bigger trends, and they get caught on the wrong side of the market over and over and over again. That's why you hear the term my supply zone is not holding, my demand zone is not holding. How do I know the zones that hold? Blah 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 blah. Because you're not following the higher time frames. That's why you're getting fucked. Mind my words. Again, I'm not saying my way of trading is the best, but higher time frames are your friends, bro. So what is the daily time frame saying? We see this bullish push. It's very bullish on the daily time frame. Take out this high, low, high. And what we are seeing right now is basically a retracement, a correction, whatever terms or words you want to use. And pretty much to come back to this other block. And I will expect accumulation phase to happen before we see price mark up. But this is a more broader perspective of the market, which will happen in months' time to come. I'm not really focused about that yet. I'm just using it as an idea to know where to sell to know where to stop selling. You get. If I go to the weekly or the monthly, you see this bullishness very clearly. Yeah, this is the weekly time frame. We see this break of structure. Let me delete this real quick. All right, you see this inducement that occurred. These two candles pretty much equal lows, and see price tapping lower and break of structure to the upside. So I'll be selling back to this point that wasn't mitigated. And you can see this Fibonacci here. This is the 50%. If you want to buy at discount, is it premium discount? You want to buy at discount, you have to buy at this lower point. So I'll be selling back to this point. Yep. Let's delete this Fibonacci. All right. On the monthly, you see a much more cleaner candle that says, let me hide all these things. Okay. So clearly on the lower time frame, you see this black candle, see this bullishness, inducement, break of structure, these two blue candles, and pretty much a retracement back to this other block, the deeper sides of this other block. So that's what the monthly time frame is saying. Go back to the weekly, mark out the zones. What's happening? Okay. So if you want to go crazy on the risk to reward ratio, you can target this point, but there's no point of you doing that because price always chops around sometimes. But I'm going to target this point for now. So yeah, you can sell back down to this demand and wait for that accumulation phase to start happening. Then you can now buy at these zones. I hope that was clear enough. I hope I made a point. And if you want more videos on how I trade, please like, subscribe, drop a comment on the type of video you want me to do. Is it liquidity? Is it structure? I have videos on structure. Is it top down analysis? I have videos on supply and demand. You can check my previous videos. And okay, that's pretty much it. I hope you guys found something new to learn from this video, and have a blessed one. Peace.